again, here for another video. In this particular video, what I'm going to be talking about is 10 steps to trade credit spreads. I am going to be running through this pretty rapidly because I feel like my videos are a bit too long, maybe a bit too boring. So I'm going to try to spice it up a little bit, get after it really quickly. If you have any questions or want more details on any of these subjects, let me know in the comments below, and I will see if there's enough interest to go more into detail on these particular subjects. But I'm trying to spice things up a little bit and get after it a little bit more. So please just let me know if any of these particular things you want more information on. But 10 steps to trade credit spreads. Before I begin, please go ahead and hit that like and subscribe down there. If this video brings you value, let me know that you're interested in this particular subject. I personally feel like I do it better than anybody else out there at my level. So I'm hoping to get that reflected in the algorithm to put this out to more people because I've been doing this for a long time. I've been doing this for like 15 years, and I've picked up a lot of information and trial by fire that I hope that people that are out there trying to replicate what I'm doing don't have to go through all that I went through to land on this stuff, right? And I see a lot of other videos out there, a lot of different content out there. And I feel like it gives pieces, but not the whole thing. So I'm trying to give the whole thing as best as I can so that you can start out trading consistently a lot earlier in your career than I did. So like, subscribe, share, all that good stuff. Comment, all of that stuff shows engagement to the algorithm so that this video can get out there to more people. So let's get into it. So 10 steps to trade credit spreads. So number one, you're going to want to have a specific goal range in mind, or I feel like you're going to get greedy. And this is something that I'm recently kind of sharpening myself. I have a very, very specific goal in mind when I place a credit spread trade as far as a profit number or a credit number that I'm looking for. I'm looking for either 15 or 20 cents. What I've recently decided to do after a lot of research and looking at what long-term success looks like in this realm, long-term people seem to earn around 30% per year on their trades. And my particular goal was 50% per year. And that's even less than the 20 or 15%, or excuse me, 15 cents goal on my particular trades, because I trade 5 wides, which is about $500 on the SPX. So that's a much, much higher goal than seems to be sustainable over many years. So what I've decided to do is be okay with any credit that the market happens to give me or I feel comfortable with, because the market is going to be changing and fluctuating. And sometimes 20 cents isn't there. Sometimes 15 cents is like right on the line of what I feel comfortable trading. So I decided to be okay if I get a 10-cent trade, if I get a 5-cent trade, whatever it is, if everything lines up and the number that the market is giving me is 5 cents or 10 cents, I'm going to be okay with that. Where before I just would have skipped the trade or tried to force a more expensive trade that would have put me at a more precarious position. So I added this kind of recently to mentally make myself okay with making less money for that day, because if you make anything in this realm, trading where I trade with the 5 wides and everything like that, any trade is going to get you over that 30% per year annualized mark if it's a successful trade. So you don't have to feel, or I don't have to feel disappointed or like I've lost out on something if I'm only getting 5 cents for this particular trade, as long as that trade is successful and everything lines up. The important thing is that the trade is successful, not so much how much the trade makes. So to keep from getting greedy, to keep from forcing trades at a more precarious position than I'd like to be in, mentally, I've had this as my goal. Is if it's profitable, if it's green, it's good. Okay. Number 2, have risk management in place. I cannot stress this enough. I really should have put this as number 1, but risk management is the only way that you will be long-term successful trading options, or really trading anything, but especially trading options, because there's so much leverage involved, and you really don't understand how much leverage there is starting out until you really dive into the numbers. But you have to have risk management in place. And when I say risk management, I mean setting stops on your trades so that they automatically get stopped out if the market goes against you. I'm talking about, setting up how much money that you're going to use for specific trades, how much money that you're going to use total, all of that stuff. You want to have multiple different layers of risk management set up so that if something goes wrong, it doesn't wipe you out. Hopefully you'll have enough risk management in place where if multiple things go wrong, it doesn't wipe you out. But whatever that looks like for you, and there's plenty of information out there, even on my channel, about how to set up proper or good risk management so you don't get wiped out. My personal levels of risk management are placing stops on my trades. I don't use more than 50% of my money that I'm using for trading. I don't use more than 50% of that at low levels. And as the account grows, that will shrink to smaller and smaller percentages. Okay. And then there's further risk management, beyond that I use as well. Have specific criteria entry. So you want to have rules designated of when a trade looks good for you to enter. So you'll want to look at stochastics. You'll want to look at, some people use the MACD. Some people use moving averages. You want to have a few of those set up and lined up for you to be okay. So it's almost like you're doing a checklist. Okay, the stochastics is this. The market looks like this, check. You want it so that the market checks, maybe at least 3 of those boxes before you consider entering a trade. You want trading to be very robotic. You want it to be emotionless. You want it to be standardized. Okay. So you want to have those specific criteria lined up. Number 4, look at different time frames. So here's what I mean. So this is the SPX. This particular chart is a 1-month chart, meaning every candle that you see represents 1 month of price action. You want to understand like where you are in the grand scheme of things. So right now, as this is being filmed, the market is kind of like on an upswing right after being on a downswing. So it's trying to recover from a recent downswing, but overall, the market has just generally been on an upswing over the past, decade or whatever it is, right? So you've got that framing. Then you want to drop down to maybe a daily chart. So here's where we are kind of on a daily chart to give you an idea. The market is really pumped up in the last couple of weeks after a pretty tight downturn. Now we've had just as tight as an upturn. We've had a lot of wins in a row. And even when we get a red, it seems that red just gets eaten up and rejected. So you're kind of looking on that time frame. Then you want to go down to maybe an hour time frame and kind of get a feel of where you are for there. So how's it been doing specifically in the last couple of days? What does that look like? You're just getting a familiarity and a context for where you are in the grand scheme of things. So when you zoom down to the minute level where you might be actually placing your trade, you're placing it knowing what the context of the market has been doing. You have that in the back of your mind when you're placing this trade and deciding, okay, am I going to play a call? Am I going to play a put? Do I play both sides? Or, what type of trade am I going to place and where am I going to place it at? You have that long-term context in the back of your mind to kind of help you decide where you're going to place that trade or what side of the market that you want to be on. So have that long-term context in mind as well. All right. So number 5, you're going to want to think about the risk and not the reward, or you're going to get greedy, right? So one of the big The big things that undercut people when it comes to trading is greed, especially when you're trading high probability. You can rack up a lot of wins pretty quickly and kind of get overconfident, kind of get greedy, kind of get used to winning. So you want to always have risk at the forefront of your mind. Let's say right now, so this is just how the market closed out last Friday, and it closed out on a really positive upswing. So you might be thinking, okay, let me sell a put because the market is on a really high upswing. The bulls are in control. They're bulling, right? So let me go ahead and place a put right below the market because the market's going to continue to go up. Well, if you have risk at the forefront of your mind, the first thing that you're going to think is, what if we get a retraction? What if we get a pullback? What if we get a rejection? We're already up here towards the resistance areas, probably punch through a couple of resistance areas. Well, the market might rebound, like a rubber band theory, right? It's going to rebound and come back here, could gap down. What about news? Do we have any news coming up that could affect things? What's going on in the general market? Our interest rates, what's going on with interest rates? Because that's kind of what's controlling the market right now. What's going on in the Middle East, because we got a lot of stuff going on over there. Is there any government shutdown stuff? That's this type of stuff that needs to be going through your mind versus let me profit off of this immediate thing. How much profit can I make? How much can I juice the market? Or how much can I get out of the market? You need to be thinking about risk first so that you can understand what could happen if things go wrong so that you could try to avoid those things. All right. So number 6, you want to be more patient than you think you should be, because the market wants to eat you. The market is hungry, right? The longer you trade, you're going to start to see some patterns that start to feel personal. Like for me, I feel like maybe every 4 out of 10 trades, as soon as I place a trade, the market comes directly after my trade and goes right towards my strike price that I just put out there. Like here's an example. This particular red bar that you see right here, I placed a put trade right before this bar happened. Right now, this bar was because of the 30-year bond sale that happened at this particular time. It's not something that we normally pay attention to, but this particular bond sale was just historically bad, and the market saw this and tanked. And I think I put my put trade right on this bar right before this happened. So I had to immediately get out of my trade. And I feel like this happens all the time. Like right as soon as I place a trade, the market doesn't want to do anything until I place my trade, and then it shoots right directly at the trade that I just put in. It happens all the time. So you want to think of yourself kind of as like an alligator in the swamp, waiting for the animals to come take a drink out of the river. You are sitting there motionless. You're sitting there patient, and you're waiting for your perfect setup so that you can ambush and bloop, get that particular setup that you're looking for. And until then, you're being very patient. What can help with that is setting up alerts. So if you know exactly what conditions that you're looking for, you can set up alerts to help. Like you could set up alerts on, I prefer stochastics, for example. I set up alerts on the stochastics so it beeps at me when my particular criteria on the stochastics is met. So I can kind of take a look and see, is this approaching a setup that I like? You could set up those alerts for yourself as well, so they can text message you, they can email you, so you don't have to look at the market and be looking at the screen all day. But you want to do things that help you be patient so that you're not rushing into trades. That's one of my Achilles heels, is rushing into trades and trading too early. All right, number 7, you want to trade the same product over and over. I don't know where people get this from, that you have to trade multiple different things, but this is something that I did when I first started out. Is I traded all kinds of different stocks. I traded Apple, I traded Nvidia, I traded AMC, American Airlines, Google, Amazon, all the things, right? All the stuff, right? There's no need for it. They all pay the same. Okay. They all options, calls are going to be calls, puts are going to be puts, credit is going to be credit, and debit is going to be debit. No matter what it is that you trade, the key thing is that you really want to get a feel for that with the thing that you're trading. You want to understand it. You want to know that particular security that you're trading in and out, how it moves. You want to have like a sixth sense about it, right? So I'll give you another example. My dad trades Facebook, and he's had Facebook ever since the IPO. So he tells me all the time, usually Facebook, moves like this in the morning, and then it turns around and does this other thing towards the evening. It does it all the time. He has like a sense about it because he traded it for so long and held it for so long and watched it for so long. He knows the patterns. He knows when the earnings are going to come out. He knows how they usually act towards earnings. He knows all the weird stuff that it's done that he didn't expect. There's no reason to trade more than like a few products, but I'll say one product because I only place like 1 or 2 trades a day. I don't need more than that, right? You want to have your head wrapped around what it is that you trade. So there's, pick something that you like, pick something that you think you can get used to, that you're okay with. I particularly like to trade indexes because there's so many other things that I don't have to worry about, like earnings, for example. But whatever it is for you, if you like to trade Apple, just trade Apple. There's no reason to be bouncing back and forth between 50 different stocks to trade. Just trade your thing. I saw another video where a guy that owned a private plane, they were interviewing, they asked him how he got rich. He said, I just trade oil, so trade that, but just find your thing and trade it. You don't have to trade a million different things. Understand what the market cares about right now. What is moving the market right now at this particular time is interest rates, right? It's Jerome Powell. When Jerome Powell sneezes, the market moves 30 points. When the bond auction goes wild, the market drops 20 points, like I just showed you, right? Anything dealing with interest rates right now, the market cares about. Sometimes it's war in the Middle East. Sometimes it's the election. Sometimes it's whatever it is. Know what the thing is that's really moving the market. I remember when oil prices were moving the market, and that's all the market cared about. Every time oil moved, the market moved. Know what it is, right? So that you can track it, so you can watch it. So if you can know if a thing is coming up, like I know if Jerome Powell is going to talk, then I need to pay extra attention to my trades, or if I'm going to trade, or whatever it is, I know about it ahead of time. So I'm not shocked when the market moves out of nowhere. Usually, right? There's always something, but usually when the market moves out of nowhere, I know why it's moving, right? So understand that if it's your particular stock, understand what moves your particular stock, and the macro stuff, like again, interest rates moving the entire markets. So you have to have that extra layer of knowledge about what's going on, right? Number 9, get rid of the idea of disappointment and fear of loss. This is probably the number one thing that keeps people out of trading, really, is the fear of loss. You're going to lose. You have to bake it in to your trade plan, because it's not a question of if you're going to lose or not. The question is, are you going to win more than you lose? I know the way that I trade, I need to win a minimum of 75% of my trades to break even. So 80% is profitable for me. So I know exactly how many trades that I can stand to lose and still have a profitable business. You need to understand that as well. You can lose several times in a row, and that sucks, but you have to be mentally strong enough to kind of block all of the demons out, all of the, oh my God, what am I doing? Why did I start doing this? I knew I should have never did this. I should have spent this money on something else. I could have bought a blah, blah, blah. I could have paid blah, 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 whatever. You got to block all that stuff out and just Understand you're going to lose sometimes. That's part of the game. Look at what you could potentially win if you can do this consistently and professionally. That's what you have to focus on. Okay. You know that you're going to lose. You know it's going to be worse at the beginning than once you get a real hang of it. And that can take a while. But once you get the hang of it, it could change your life. Okay. So you have to get rid of all of the demons out of your head, the shoulda, woulda, couldas, all that kind of stuff. Just look back at it on the weekend. How could you have traded it differently? What could you have done better? Look at it from that standpoint. Do an after action review, but don't get yourself down and beat yourself up like, oh, you're dumb because you placed this stupid trade here or whatever. You know, the market makes everybody look stupid every once in a while. It really does, you know, but don't let that interfere with your process. That's why you have these processes. That's why you have all the stuff that we talked about earlier in the list, so that you can make this a business, so you can make it robotic and build all of this stuff in. That's why I said, again, even the first thing that I said was I'm adjusting my mindset when it comes to goals and looking for maybe like a 30% annualized profit, because that's realistic from other traders who have done this for years successfully and are living off of their accounts. They achieve about 30%. Warren Buffett, if you look at ever since he's been 26 years old, annualized, his fortune has grown by about 30% compounded every single year if you do the math, right? So you know that that's kind of a realistic world number that has been achieved by a real person and real people, right? So something to keep in mind there. Number 10, know all of the possible outcomes of your trade before you get into that trade, and know what you're going to do if that happens. So, you know, let's say, for example, again, we come over here, we're going to put, let's say we're going to put a call trade above the market and say that the market's probably primed to rebound or, you know, oscillate or whatever. We're going to put a call trade up here and you're going to feel really good about it. Well, understand what could potentially happen, all of the potential outcomes that could happen to that particular trade. So the way I tend to look at it is there's about 1, 2, 3, 4, 5 avenues that the market could take once, you know, I place my trade. Either the market is going to shoot straight up into my trade. I'm going to get stopped out very quickly. That avenue is already taken care of. I know what's going to happen. I know what I'm going to do if that happens. I'm going to let that trade go ahead and get stopped out. The market could shoot off in kind of the direction that it's currently going. I could be wrong. This is an iffy direction for the trade. It won't be comfortable. I won't like it. But again, I have my stop. If it gets too far in the tooth too quickly, I'm going to get stopped out. So that's 2 directions. Third direction, the market is going to go kind of sideways. If the market goes sideways, that's perfectly fine for me. I've got my stop in case it wants to shoot up at the very end or something like that. But if it goes sideways, I win. If the market goes slightly down, I win. If the market goes straight down into the tubes, I win. I know exactly. That's all that the market can do. It can only go those 5 different directions, right? So I win in 3 of those directions. I have at least a 60, whatever it is, percent chance, 65, 66% chance of winning just based off of the naked odds, not knowing anything else about the particular what's going on with the market. And I know what I'm going to do. I'm going to sit here and collect my money if the market moves anywhere in this direction, and I'm going to lose some money if the market goes in this direction. I know exactly how much money I'm going to lose. I know exactly how much money I'm going to win. I know exactly how much time it's going to take in each of those scenarios for that to happen, right? So I know and have full knowledge, and I'm comfortable with every possible scenario in that particular trade. If I place a put trade later or at the same time, then I still know exactly what I'm going to do in those scenarios. So before I place a trade, I know exactly what's going to happen in every scenario, everything that the market could potentially do. I already know what I'm going to do. Am I going to like it? Maybe not, but it's not, am I going to like it? I know what I'm going to do, right? All right, so those are the 10 steps to trading credit spreads that you need to know and trading them as a business and trading them profitably, right? Now, each one of these is going to have detail to it. So again, if you want more detail or want me to go further into any of these particular criteria, let me know in the comments below. Now I'm going to give
Continued in part 2. Don't forget to like, comment any questions below, and hit the bell icon for posting notifications so you don't miss out.